Hi everyone, hope you guys are all having a great day today. In today's video, I'm going to cover the whole entire market in terms of Dow Jones, NASDAQ, and S&P 500, including the economic calendar. And then in terms of the S&P, I'm going to be specifically looking over ETF SPY, ETF for the S&P 500, and ETF QQQ, ETF for the NASDAQ. They're the same thing, just different ratio, that's all it is. So basically the movement and all that stuff. Now before I get to the technicals, I'm going to go over the investor sentiment plus the economic calendar and go from there. And then be mindful on January 1st, the New Year's Day, the market will be closed also. So that's on the Wednesday. Now, in terms of investor sentiment, we are sitting right now at 37.8% for the week of December 25th, 37.8% bullish. Now, that is still higher than the historical average at 37.5, but it has been decreasing week over week. So the bullish sentiment has been decreasing, plus the bearish sentiment actually has been increasing. So we're at 34.1, where the historical average is 31%. So higher than the historical average, and we've been higher since the historical average for the past, give or take, 3 weeks right now. Basically, ever since December 11th, we were at 31.7 and then 31.4. So slight increase or a decent amount of increase from the previous week, plus above historical averages, whereas for the bullish case has been decreasing from the previous week and previous weeks in general, plus it's still above historical average for the time being, right, with just 0.3% higher. Now in terms of economic calendar, for Monday, December 30th, we have at 9:45 a.m. we have Chicago Business Barometer PMI. Previously it was 40.2. This forecast, give or take, is 42.2 coming in for the month of December, by the way. And at 10 a.m. we have pending home sales for the month of November. On Tuesday, December 31st, 9 a.m., we have S&P Case-Shiller Home Price Index, 20 cities. And then on Wednesday, again, like I stated, January 1st, New Year's, and that New Year's holiday, but the market will be closed. And then on Thursday, January 2nd, market will reopen, regular hours. By the way, for Tuesday, it is regular hours, even though it's New Year's Eve, regular operating hours. And then on Thursday, January 2nd, 8:30 a.m., we have initial jobless claims. Previously, it was 219. This time around, they're expecting 225. This is for the period of December 28th. And then at 10 a.m., construction spending for the month of November. And then on Friday, January 3rd, we have 10 a.m., we have ISM manufacturing for the month of December. Previously, it was 48.4. This time around, 48.1. Now, in terms of the market, it is, in my opinion, looks like it's pointing to the downside a little bit for the time being. And this is just my opinion. So I'm not a professional. Please do own due diligence and research before buying and selling. We do have this channel right here. We do still have more to the upside. This is dating back since 2010, but I think the market's going to be pretty choppy until the new year, basically. So essentially on Thursday's trading day. For the time being, indications are kind of potentially pointing to the downside, more so for the Dow Jones, but I'm going to go through all of them. So for the S&P first, I'm going to look at ETF SPY, ETF for the S&P 500. For the SPY, closed at 595 and 1 cent. And if you look at the 1 year chart, it looks like this is MACD line indicating downside, bearish or bullish movement. Currently, it is in the bearish movement and got re-solidified with more downside. Again, this is the 1 year chart, and then the volume has increased, but more of the selling. So again, more towards the bearish. Now, can we bounce off this 50-day moving average? That is a potential. We did technically already break through it, and did break through it earlier and tested it, but then broke through to the positive side. But with this MACD line indicating more downside, I think we might still see more choppy. Again, this is just my opinion, more choppiness until the new year. That's what I'm thinking, right? I don't think we will see massive buying until essentially January 1st. Now, in terms of the 5 year chart, MACD line is to the bearish side as well, so indicating more downside for a 5 year chart. We are seeing more buy volume for the five-day chart, so potentially we could bounce up. You could argue we are like somewhat at the limits of an upward trend, somewhat, but I don't know, with the Dow Jones pointing more downside, and I'm going to show that soon, I think we have more downside to come, potentially, right? Until we find, in the NASDAQ, it kind of shows we could be bouncing off one more time. So then I think that's more closer to January 1st, and I'll show as to why. But before I get to the rest of them, just FYI, we are at a channel dating back since 2010, upward trend resistance line. Right about here, you can see upward trend resistance line dating back since 2010, upward trend support level dating back since 2010, and then here's 2 major crashes. So I just keep mentioning this because if we ever do drop down, I think this would be a good level. This is only 2 touch points, so technically this upward trend resistance line does not exist, technically, but it'll be interesting to see if the 3rd touch point ever hits, if we ever drop down to this level. So I'm just mentioning that in case if we ever get to that level, and you could technically enter a position to hopefully bounce up to the upside. Now, the reason I'm mentioning this is because we're in the mid zone, and just because we're in the mid zone, we do have more room to the upside, but it doesn't mean we can't go down. We've seen before in the mid zone, we still drop down. You can see right about here, drop down as well. But again, it's not necessarily doom and gloom, because if you go to the all chart too for the S&P, it is still in the bullish movement, and we still technically could be going up. There's no real strong indications to the downside, even though the MACD line has become a lighter shade of green, but we've seen that before and it became a solid green after that too. So just be mindful of that. Now for the Dow Jones, this one is the biggest indicator to the downside in my opinion. We are in the bearish movement right now with the MACD line. It looks like it's arching down for further downside. And then this is the interesting part. So we broke through the 50-day moving average, came down directly, bounced off the 100-day moving average, actually provided a decent amount of support, where you would think that maybe if we're going to retest the 50-day moving average, potentially break through it, right? Especially with the MACD line potentially, not necessarily crossing over, but getting close to it. But the thing is, tested the 50-day moving average and still headed down, and it looks like potentially more further downside. And the question is, will we bounce off the 100-day moving average once again? Now we close at 42,992 points, and this 50-day or 100-day moving average is sitting at 42,422 points. So again, that's 42,422 points. Mind you, these are moving averages, so this average will move once we get to it, basically. So it's not going to be exactly these points. Just be mindful of that. Now that is for the 1-day chart. The 5-day chart, or the 5-year chart, that was the 1-year chart. So the 1-year chart, now this is the 5-year chart. And the MACD line is in the bearish movement. It's pretty much just starting, right? You could potentially think that we were at an upward trend level, give or take, at like S&P, but this one looks like it pretty much broke it. So unless we reverse anytime soon, which I'm not expecting that, because the MACD lines are pretty strong for the Dow Jones to the downside, it looks like more downside's coming. And then in terms of 50-day moving average, which we do have this upward trend dating back since, I believe this was 2021. Yeah, 2021. So we had an upward trend resistance line that could act as support, which we've seen that in the past. And if we were to extend it, it kind of not necessarily collides with the 50-day moving average. It would probably provide a little bit of support. And that's looking at support roughly about, give or take, where is this, right about here? There's not a guarantee. I wouldn't bank on this though, but about 41,180 points, give or take. But the moving average predominantly would most likely would be looking at is about 40,483 points. Again, moving averages do move. So by the time we get to it, probably be 40,400 clean. Who knows? We'll see. I'll keep you updated. In terms of alt chart is pretty much like an S&P. Again, like I said, it's not all doom and gloom, because technically we've seen light greens before, but then it turns back to solid green. In my opinion, this is just my opinion, given the current administration, but the administration that's coming in, I think it will be beneficial for the economy. I think the market already knows that, and the upside will be coming at one point. Nothing's guaranteed, obviously, right? But I think everybody's just waiting for essentially the new year to pretty much come in with more volume to buy shares, right? Or stocks, right? But for the time being, it's a little bit shaky by the end of the year, it looks like. And then for the NASDAQ's not necessarily as bad as the rest, but it's still pretty much showing downside nonetheless. So the MACD line right about here, showing bearish movement for the 1-year chart, by the way. This is 1-year chart. Bearish movement, it got re-solidified to the downside. Now the question is, let me just zoom out actually. And then there is a downward trend recently too. So we went up, came down, and then pretty much formed the downward trend. The question is, will we pass this soon? If we do, we potentially have more to the upside. But for this one, it is interesting because it's colliding with the 50-day moving average. Just like the S&P, we have an upward trend resistance line dating back since 2010, upward trend support level dating back since 2010. We did break through it since 2020 to 2022, came back underneath, had issues passing it once again, then did have a false breakout, and then came back underneath, had issues passing once again. Then we did break through it. You can see right about here. So we broke through a couple times, false breakouts, but not only did it act as resistance, but it has acted as support as well. Not necessarily bounced off the moving average, bounced off basically upward trend resistance line that acts as support as well, right? So this pretty much collides at the exact same time. So I'm going to give you the moving average. This is the QQQ ETF for NASDAQ, closed at $522.56. And the 50-day moving average for the 1-year chart is at $509.65. Again, moving averages do move, but you're looking at $509.65, give or take. $509.65. Now, will we bounce off this and then go up to this upward trend resistance line and break through it? I think potentially that is possible, because by the time that happens, we're looking at January 3rd, which is the Friday. Maybe not necessarily the end of the week, probably bounce off fully for the new year, but maybe by the Monday, the first Monday of the new year, we could break through this potentially, right? So over the weekend, we solidify and break through. Now for the 5-year chart, we are in the bullish movement, right? It's potentially in the mid zone because it's completely straight. You could argue it's going to come down, right, or go up. And then one thing I want to show also for the 1 year chart, the volume has increased, but more of the selling side for the 1 year chart, right? We saw buying volume drop. It slightly increased lately, just before this uptick data point, but it has been majority selling. But on the 5 year chart, we've seen right now for the data point until the new one comes in, right now it is more on the buy side. So this could just continue to the upside, and we're seeing a slight decrease, just like I stated before the new year, and then start heading down. So like I stated, the NASDAQ is a little bit different than the S&P and Dow Jones, where the NASDAQ kind of showing there's more upside, especially for the alt chart. The alt chart is more solid greens versus a mix and match, and they're pretty much light greens, I believe, for the S&P and Dow Jones. If we're well, actually, yeah, the S&P. So the S&P is, yeah, light green, and the Dow Jones, I believe, was light green as well, light green, yeah. So where NASDAQ is tech stocks, predominantly, basically tech stocks. So they have more volatility, and if the volatility is more to the upside, it could carry the markets because the S&P also has some of those tech stocks, right, like Tesla, Nvidia, and stuff like that. But that's basically it for today's video. Essentially, for the time being, it looks like it's going to be choppy, in my opinion. And then indications are to the downside, right? So it doesn't necessarily have to mean that by the new year comes in for the, like, for example, the Thursday and Friday, that the markets will go up. Just in my opinion, I think everybody's waiting pretty much for the new year to buy shares again. So that's basically it. But thanks again for watching. I do appreciate it. If you did find it beneficial and helpful, consider dropping a like. It does help with the channel, so thank you so much for that. I do post these weekly, so if you want to be notified when I upload my next weekly video, consider following and subscribing. And thanks again for watching. Take care. God bless and peace.